Good morning. This is going to be a follow-up video. Similar question as the one we had literally yesterday regarding buying or leasing a car for tax perspective. So we're going to kind of move into another area. So once you've kind of made that financial decision of buying or leasing a car from a tax perspective, now we have to look at, well, how do we calculate the deduction? Which way do we go? Because there's actually two methods in the tax code that allows for us to write off vehicles. So continuing on that topic, the two methods are actual expenses, which is like paid for gas, oil, repairs, tires, whatever. And then the other method is the mileage method, which is a standard rate that the IRS gives us every single year, multiplied times the actual business miles that we have. So typically around 50 cents it's been in the last, 5, 6, 7 years. Currently right around 57, 58 cents. It kind of changes. Every year it actually changes. How does it change? That's a good feature. It actually changes based on inflation. So the government's looking at the cost of oil, the cost of other things, and they're saying, okay, well, the cost of operating the car is right around this, and they accrue it. So in that, say, 58 cents that they may give us, a chunk of it is for the depreciation of the car. In fact, a big chunk of it is. Then we've got our gas and our fuel, our oil changes and our repairs. They're all like little segments, like 4 cents of it is this, 8 cents of it is this, and you can actually see kind of how they come up with it. It is Googleable, I suppose, to be able to see those types of things. But so that's the standard mileage method, and then our actual expenses are where we actually go, hey, save the receipt, right? And we actually have to save the receipts and keep track of what we actually spend on the vehicle. So let's talk about the first piece, actual expenses. What are actual expenses? Actual expenses are anything related to the car. We're not talking about parking, and we're not talking about tolls either. So what we're really looking at there is the actual costs to operate that vehicle. And so we would keep track of those things on a spreadsheet, but we got to do one thing. In the previous video, I talked about business use percentage. And so when we look at the business use versus personal use, we have to take that into consideration. So for example, if you spend $10,000 on a car, one of the things that you may have to look at is, can I actually deduct all 10,000? And the answer is no, unless that vehicle is 100% for business. How do we determine business use? Well, it's actually determined by the mileage. So if you're understanding the gist, if I choose the mileage method, I have to keep track of my miles, right? But if I choose the actual expense method, I have to keep track of my miles, right? And the answer is yes, you do. And because you have to know from that other method, basically, how much of the percentage of those expenses can I actually take? And now we're not talking about a fleet car or anything like that. We're talking about your vehicle used in a trade or business. Not W-2 employees in the current environment. We're talking about self-employed people. Say like a realtor, right? They would have this opportunity to be able to look at what either method that they want. So the key there is we've got to keep our mileage log. We have to know who, what, when, where, and why, and determine what our business miles are in comparison to our whole odometer. That's going to create a percentage. We apply that percentage to our actual expenses. Once we apply that percentage to our actual expenses, we're going to say, let's say it's 50-50, right? 50% personal, 50% business. And let's say we use $10,000 to operate that vehicle from operating expenses. That might be a little high, but we'll just use 10 grand because it's easy. When we do 10,000, we'd multiply it times 50%. Great, we would have a $5,000 write-off. Well, now let's go over to the mileage method. Let's say we drive 10,000 business miles, not total miles, but business miles, and then mileage rate in that year is 58 cents. Okay, well, we'll take that 10,000 miles times 58 cents. That's a $5,800 write-off. Even though our business use might be 50%, I get a $5,800 write-off over here in this hand, or 5,000 in that previous example of 50% business use. So you can see, how that works. Now there's a caveat. If we go down the actual expense method path and we accelerate depreciation, what do I mean by accelerate depreciation? It means we're going to take a lot of depreciation up front, because if you remember from the previous video, a car is a 5-year asset, meaning we write the car off over 5 years. We can't necessarily flip-flop, right? I can't 1 year go, I'm gonna go mileage. The next year, I'm gonna go actual expenses. We kind of set it and forget it when it comes to these types of things. A few caveats, we're not gonna get down into the mud, but basically that's the gist of what you wanna look at. So when you try to make the determining factor of how you want to write off your car, you need to look at, well, it's a question I ask, do we drive a lot for work? Right? Because again, notice on the actual expense method, it doesn't matter how much you drive for work. It matters about the percentages. So if I drive 100 miles a year on a car, but all 100 miles is for work, well, it's 100% business use. And so my insurance, my oil changes, and those things, I'm probably gonna go that way, because 100 business miles times 58 cents is, well, what? Nothing, right? 58 bucks. And so you have to look at that. So let's say you're a realtor. And if you're a realtor, realtors do pound the pavement, right? They're out there showing houses, doing all the things that they got to do, driving around looking at their listings, making sure yards are mowed, whatever's going on, right? They're going to put a lot of miles on. Average realtor is going to put on anywhere from, 10 to 20,000 business miles as an active realtor. I think that's very, very normal. Well, in that particular case, let's say it's 20,000. And if the mileage rate is 58 cents a mile, right, we're looking at $11,000 tax deduction for taking the mileage method. I don't know about you, but I don't know many cars that take $11,000 a year to operate, okay? So you have to take into consideration which way might be better for you, but then understand that most likely, if you go down the path of, say, mileage method, you're not gonna go back to actual expense, or vice versa, okay? So there's your answer. That's how you can determine whether or not you're gonna go mileage or actual expenses.